QI Scared. Today we discuss Oracle because this is a very interesting case. The reason why I caught my interest was primarily because Oracle had a period of negative equity, which is quite well known in the industry. And this period of negative equity usually causes a bit of a stir, primarily because the equity position being negative means that shareholders really have no value or little prospects of value. And what it turns out to be in this case is quite interesting. So the roll forward on the negative equity can be seen here, and you can see that the equity position was declining over quite a long period of time, and it seems to be a strategic play. What happened is Oracle was basically trying to maintain its position to keep its stock value quite high, primarily perhaps because Ellison and other investors want to see a steady share price or a controlled share price as it repositions itself. And in this case, you can see dividends are continually going out, and then you can also see that the equity balance declines. But that's not the point. If you look at the cash flow in particular, you will see quite an interesting play in cash. What happened in cash was really in financing. So if you look at the financing position, you can see that the debt position had kind of a cyclical bubbles. You had one here, then up to 2022, there was just paying out dividends and paying out debt. There's a bit of investment in some equities, securities, and so on in the period. Luckily, the market went up, otherwise the strategy would be in doubt. And then they had a big acquisition with a refinance of debt in this period here and the following year. So it was a question of long game, really a question of long game, which Oracle applied in this case. Again, it's very, very interesting because if you look at the investing line, you can see the long play where they bought, I think, a healthcare database provider, which is a segment they never normally played in before, had no position in, and they need to revive the company's profit line and maintain what is a very high return on equity, which is basically a contra game against debt. Have a look yourself and tell me what you actually think about